Hey guys, what's up? Good evening. Welcome back to another live stream. It should be live already, I think. Is it the case? Let's see. Is it the case? Can you guys hear me or see me? J Sports, what's up, bro? Okay. I am not live quite yet. There you go. My stream was lagging a bit. Okay, welcome back, guys. Please drop a comment down below and let me know what stunks you want me to go over. Juan Machado, hello, buddy. Siki, I can hear you and see you. Thanks, Kimberly. J Sports, there you go. So, wow, guys, what a boring trading session. Unbelievable. Terrible, huh? No volatility, a narrow ranging trading session for the most part, and no definition to either the downside or the upside. And most of the gains that we saw today were made overnight. Shoppiness was all over the place. So these kind of trading sessions, guys, and this is something that I am always highlighting to you, are not meant to be traded. So you can open some positions here and there, but if you try to force trades within a trading session such as the one that we had today, you're going to lose money, more likely than not. Needless to say, guys, in your case, because most of you guys buy short-dated options, calls or puts that expire the same week. In that case, the theta decay is terrible, guys. Yeah, so today the only winner, or I would say that the only winner in today's trading session were the market makers. Yeah. Those were the only ones that made some money today. For the most part, let's say, in general terms. Let's just put it that way. So take a look, guys. Despite the fact that we had a huge gap up overnight, the Nasdaq went up today 0.04%. It pretty much closed flat. The S&P 500 went down 0.02%, flat. And the Dow Jones went up 0.37%, and the Russell 2000 went down today 0.25%. So I hear an echo. Really? No, I think that everything is good with my sound, bro. Let me see. Let me double check on that. Echo, really? No, good. Yeah. My sound is perfect. It's a radio, bro. Okay. All right, Eduardo. Hello. Michelle Robertson. Welcome back. David Castillo. Janelle Clark. What's up, folks? Dieter's Critters. Carlos Brathwaite. Osama Umweni. Hello, guys. Thank you. And thank you so much for being here, okay? Okay. So if we take a look, guys, at the 11 sectors that trade inside the S&P 500, today we didn't have a good day. I am not making any bear case over here, but take a look, guys, at, again, the 11 sectors that trade inside the S&P 500. We only had 4 sectors going up today, including the almighty tech sector, which pretty much was the sector that held up the S&P 500 for the most part today. So the tech sector went up today 0.31%, and another important sector inside the S&P 500, such as financials, went up today 0.27%. For the most part, guys, and taking into account that out of 11 sectors, we had how many? We had 7 sectors going down. If it hadn't been by the tech sector, today we could have had an ugly day in the markets. But this is something that I have been telling you guys, and I am always highlighting this information to you on our Discord in the channel that I have on our Discord. Guys, the S&P 500 is, as of now, this could change eventually, is following whatever Nvda does. That's it. So the S&P 500, guys, the most important index of the entire world, is pretty much tracking a semiconductor stock. Unbelievable. Unbelievable, guys. So Nvda represents, as of now, the sentiment of the markets. If Nvda goes up, then most of the market participants are willing to buy calls and to go long the markets for the most part. And if Nvda starts to pull back and if Nvda starts to show some sort of weakness, then everyone starts to buy puts or sell out of their positions. Unbelievable, guys. The phenomenon that we are seeing as of now in the case of Nvda is nothing short of extraordinary. For real, nothing short of extraordinary. But take a look at the other sectors, guys. Consumer discretionary down today, 0.09%. Industrials down 0.26%. Communication services down 0.44%. Today, Netflix got killed. And I think that also Google went down today. Yeah, that was the case. And Netflix is flying after hours. They posted a very good report. Consumer staples down 0.45%. Healthcare down 0.56%, despite the fact that Humana had a very solid day today. Real estate down 0.65%, and utilities down 0.86%. So for the most part, the markets showed a bit of weakness today. Is that negative? Let's reconcile the performance of the 11 sectors that trade inside the S&P 500 with a 4-hour chart of the SPY. Take a look at this, guys. Above all the moving averages, and all of the moving averages are upward sloping. The SPY is under the total control of buyers. Period, full stop. That's it. So in order to short the SPY, you need to wait until you see a bit of weakness in minor time frames, such as maybe having the 5-day moving average, this white line that I am pointing out with my mouse, being broken to the downside. I am talking about 481. If 481 happens to be broken to the downside, the next, I would say, level of interest from a support standpoint could be this pink line that I am pointing out with my mouse. This is none other than the 20-day moving average, 20 DMA. And take a look. If I draw a line here, guys, this 20-day moving average happens to coincide with a former breakout area, or it happens to coincide with a former breakout level. In the case of the SPY, we are talking about $573.80-ish. We can round it up, $574. So in normal market conditions, and I don't know, maybe tomorrow we happen to have a bloodbath. By the way, keep in mind that tomorrow we have a monthly options expiration. So we're going to have a larger amount of options expiring relative to any other regular Friday. Let's just put it that way. So if they happen to pull the markets, or if they're, in general terms, guys, if the rug happens to be pulled out tomorrow, and I don't know, if maybe the SPY breaks this 5-day moving average to the downside, 581, 581, 582, 581.50. There is a zone there between $581.50 and 582. If this 5-day moving average happens to be broken to the downside, and if we happen to see, I mean, this would be a drop of how much, guys? This would be a 1.26% drop. So in other words, if we happen to see a test of $574 approximately, I don't know, maybe tomorrow, maybe within the next 2 or 3 trading sessions, I might be inclined to buy the dip around 574. But other than that, guys, if I zoom out on this 4-hour chart, take a look. This technical chart is under the absolute control of buyers. That's it. If you buy puts here, you are guessing. This is a guess. Okay, I think, I don't know, maybe the markets go up tomorrow once again up to the brand new all-time highs, 586.34. And maybe you can say, okay, this is, this level acted as resistance yesterday. So I don't know, maybe this is going to be a potential double tap. I'm gonna grab puts here at 586.34. You could be right. But if you guys short a technical short, guys, in an uptrend, without having an important level of support being broken to the downside, you guys are going to be wrong 9 out of 10 times. I guarantee you that. So let's see what happens, guys. I am rooting for a pullback here in the case of the SPY, but I am not going to be shorting this tape until we have some sort of technical confirmation of weakness in minor time frames, such as the fact that maybe the 5-day moving average happens to be broken to the downside. Okay, let's go over some stocks here. And if you have any questions, please let me know. So we have, let me see, we have super microcomputer. Let's go over to SMCI. And again, guys, you know that I do live stream throughout the whole trading session for my group of traders. And you don't need to sign up for my Patreon or whatever. I am not pitching anything here because it is spoken in Spanish. So you will not understand a word. You guys are good here on Chris Saint's server, right? But when I go live for you guys on Thursdays, I mean, I have been already streaming for something like 7 hours. So I'm super tired. If you notice some mistakes here and there, then I do apologize for that. And on top of that, today, I had 2 live streams, guys. So I went live for my group of traders from 8:50 a.m. until 4 p.m. and until 3:50 p.m. Then I finished. I closed that stream and I started another stream for another group of traders in order to trade the earnings report of Netflix. So I'm super tired. So, if you notice some mistakes here and there, I do apologize for that. Okay, Super Micro went down today 2.39% and it closed the trading session at $47.58. By the way, and put this on a sticky note, I got an unusual options alert in the case of SMCI today. Let me see if I can. Where is it at? Let me see, guys. If I find the info here. What is it at? So someone got puts of SMCI, guys, yesterday. Big time. But now I don't find. Let me see. Where is it at, bro? Here it is. Okay. So take a look, guys. Yesterday, someone, we don't know who it was. I don't know, maybe a whale, maybe an institution. We don't know. Okay, someone invested $1.9 million in put options of super microcomputer that expire on October 25th. That's next week, guys. In a week, pretty much. With a strike price of $48. And take a look at how this put option alert worked out today to the penny, guys. The second super microcomputer, or the trading session opened, take a look at what happened with Super Micro. This stock collapsed right away, guys. And this trade is still open. So whoever purchased or whoever invested $1.9 million in put options of super microcomputer is expecting more downside in the upcoming trading sessions. Just so you know. Okay. If I pull up here once again, this 4-hour chart, take a look. Today we had a very positive sign. Actually, yesterday. Take a look at this green line, guys. This is a major downtrend, by the way. Keep that in mind, obviously. Take a look. This is a major downtrend, okay? This is a technical chart that is broken as of now. But in minor time frames, we can make a case that buyers were starting to make some progress. Why do I say that? Well, because this white line that I am pointing out with my mouse, this is the 5-day moving average, is as of now upward sloping. That's positive. That implies that buyers are starting to make some progress in minor timeframes. But take a look at the slope, guys, of the 50-day moving average. The green line that I am pointing out with my mouse. It is downward sloping. It is putting downwards pressure over super microcomputer. The slope of any moving average is super important, guys. So take a look at what happened in the case of the 50-day moving average. Take a look. We had a first test on October 8th, and Supermicro was rejected right at the 50-day moving average. Then we saw another test on October 14th. What did happen? Rejected once again. We had another test of the 50 DMA when on October 15th. Rejected once again. And take a look at what happened. Yesterday, finally, the buyers were able to recapture the 50-day moving average. They started to consolidate above this moving average. And today, they closed the trading session once again below the 50-day moving average. So in technical terms, they were rejected once again. So for a moving average, in order to be recaptured, we need to see at least 3 candle closes. I'm talking about trading sessions above that moving average. So they were rejected once again, guys. This 50-day moving average has turned into a nightmare, guys, in the case of super microcomputer. Well, this 50-day moving average, if I zoom out a bit here, take a look, is pretty much coinciding, almost coinciding, not to the penny, but it is almost coinciding, with a previous level of resistance in which super microcomputer failed on 2 occasions back in late September. So in the case of SMCI, the technical picture is kind of easy in minor time frames. If you guys want to go long SMCI, you need to necessarily see some process of consolidation above the 50-day moving average, which as of now is signaling $48.20, and also a process of consolidation above this former level of resistance that I just told you guys about from late September. So say Supermicro happens to consolidate above $48.70, 49 bucks. That could be potentially opening the door for a new test of this level at which Supermicro was rejected today at $51 approximately. If we were able, guys, to take this trade the way that I am describing it, say that we start a position on SMCI at 49 bucks, and if we close, if we are able to write it up to 51 bucks, this could represent a 4% profit trade. Nothing to sneeze at. So in my opinion, guys, a no touch below 49 bucks, and above 49 bucks, I think that there could be a short-term trade to the upside over there in the case of SMCI. Say that another potential scenario. Say that the bulls failed at recapturing both the 50-day moving average and the former level of resistance that I just pointed out. What could be a potential level of support to the downside? 45 bucks. This is a level that happens to coincide with the 20-day moving average, which happens to be this pink line that I am pointing out with my mouse. You guys are looking at 45 bucks. And that 20 DMA is kind of trying to upward slope. So it could act as support approximately. I wouldn't be an advocate of that trade because it would be trading below the 5-day moving average and the 50 as well. So I would rather go long here above $49 approximately. Let me take a look at anchor VWAPs, AVWAPs in the case of SMCI. Let's take a look. Take a look, guys. Let me see. If we take a look at an anchored volume weighted average price line that comes from the last earnings report of Supermicro, we get a price of, guess what, guys? $48.50. So the average market participant that started a position on Supermicro when this company posted its last earnings report as of now has an average price of $48.50. Take a look. And there are no accidents nor coincidences. that anchor VWAP coincides with the previous level of resistance that I just pointed out back from late September. So that, I would say that provides me a bit more of confidence that if Supermicro consolidates above $49, there could be a potential trade to the upside over there. You gotta be careful because this technical chart is broken, and as of now, let's say that the news cycle, this is a stock that is very sensitive to the news that could be potentially coming out about the accounting of the company and the 10K that they need to submit to the Securities and Exchange Commission. So that is another ingredient that could potentially affect any trade that we open on Supermicro computer. And lastly, if we take a look at the market structure of SMCI, so let's take a look at the demand and the supply of Supermicro computer to see what we see here. SMCI, while I take a sip of Sprite here, let's see. Excuse me, guys. I've been, talking all day long. Take a look. The market structure looks constructive. Let's just put it that way. Take a look at the demand. It is through the roof, to be honest with you guys. And the supply is also rising, but the level of the demand is above the level of the supply. We can reconcile this market structure chart with this 4-hour chart in which we can visualize an upward sloping 5-day moving average. Above $49, guys, I would be willing to give SMCI a shot. There you go. How do you get the SMCI option alert? A little bird told me. Yeah, I have a little bird that comes to my studio every morning at around 7 a.m. Yeah. The bird tells me all of my unusual options alerts. Okay, let's keep going. Any technicals on Nvda? Of course, bro. Sure. Nvda went up today 0.89% and it closed the trading session at $136.93. Oh, by the way, I have another unusual options alert on Nvda. If I happen, wow, my studio is a mess, guys. I need to clean up my studio. Do I have it here? I don't have it here. This is the 15th, 17th is the 16th. Okay, here it is. So, and this unusual call options alert did work out to the penny, guys. So on Wednesday, put this down on a sticky note, guys. Put this down on a sticky note. Okay, on Wednesday, on Tuesday, guys. On Tuesday, someone invested $4.7 million on call options of Nvda that expire on November 8th with a strike price of $133. Take a look at what happened with Nvda since Tuesday, guys, or since Tuesday's trading session. Was it Tuesday? No, this is 17. Oh, this was from yesterday. I take that back. This unusual call options alert of Nvda comes from Tuesday's session, but I got the alert yesterday and a bit before the trading session opened. So take a look, guys. So the way that I measure the performance of any unusual options alert is from the beginning of the corresponding trading session. So I got the alert yesterday, and Nvda opened that trading session, or yesterday's trading session, at $133. So from $133 up to pretty much today's open, Nvda went up 5.49%. It's been going on a tear, and obviously Nvda has been, or let's say that Nvda benefited a lot from the earnings report of TSM, Taiwan Semi, which was unbelievable, guys. The earnings report of TSM was unbelievable, impeccable. So in the case of Nvda, we saw a bit of profit taking today, and Nvda still has unfinished business, guys, at the all-time highs of this stock. $141.72. What do you guys think is going to happen here, guys? Take a look at this 4-hour chart of Nvidia. This is the 200 DMA, 200-day moving average. Take a look at this blue line, the 100-day moving average. Take a look at the pink line, the 20 DMA. Take a look at the white line, the 5-day moving average. And take a look also at the 50 DMA, this green line that I am pointing out with my mouse. All of these moving averages are upward sloping. This is a technical chart that is under the total and undisputable control of buyers. And this technical chart is signaling that in normal market conditions, Nvidia should be making a test of all-time highs, guys, at $141 sooner rather than later. Where I would be interested in buying the dip in Nvidia, guys, say that, I don't know, tomorrow we see a bit of profit taking or whatever it is, and Nvidia pulls back and stuff like that. Keep an eye on the 5-day moving average, guys. Let me draw a line here. Take a look. So the 5 DMA, this white line, coincides with a previous level of resistance for Nvidia back from October 10th. This is a potential area from which Nvidia could be bouncing back up. $135. And let me zoom out here once again. Let me see. Take a look. Say that Nvidia breaks 135 to the downside. It could happen. Okay, hopefully it happens. Okay, Nvidia breaks $135 to the downside. What could be the next potential level of interest for a bounce back up situation or type of situation? None other than a former breakout level for Nvidia at $130.60. Take a look. Nvidia failed at $130.50-ish on 1, 2, and 3 occasions. It finally was able to take out that level, and once it did, guys, take a look. Since Nvidia was able to recapture and burst above $130.58, which happened back on October 7th, it hasn't traded below that level ever since. So this level, the price action is telling us that $130.50 is an important level for Nvidia. It is a former breakout level at which I think that in regular market conditions, Nvidia should be bouncing back up, or could be potentially bouncing back up, more likely than not, I would say. Okay, so these are the levels that I would be keeping an eye on in the case of Nvidia. Let's take a look at the market structure of Nvidia. And again, guys, I think that taking into account, I will go over Chipotle. And in the case of Nvidia, I think that this hype for semiconductor stocks, like very, very, very related, let's just put it that way, to, AI data centers and stuff like that, might keep going, guys. The report that posted Taiwan Semi last night was impeccable. Unbelievable. Record revenue, record net income. I don't know. They posted something like a 35% year-over-year revenue growth. Unbelievable, guys. The revenue of TSM is, not the revenue. The growth that we are seeing when it comes to basic metrics of all of these ship stocks, that most of them used to be cyclical stocks, is unbelievable. So something is going on here with AI. I don't know if this phenomenon, in the case of Nvidia and Broadcom and TSM, is going to last long. I don't know for how long it is going to actually last, but as of now, it is a reality, guys. The hype is real. And we have a lot of companies investing a lot of money on chips for AI data centers. The phenomenon is real as of now. It could fade away eventually, but as of now, it's real. Take a look. So this is a market structure chart. On top of this chart, you guys can see the demand. And at the bottom, you guys can see the supply. The demand is through the roof and the supply is going down, guys. We can reconcile this market structure chart with this 4-hour chart. And why? Well, because we can visualize over here an upward 5 DMA, an upward 5-day moving average. This technical chart is under the total control of buyers. Period, full stop. Can we short Nvidia with some put options? Yeah, sure we can, but we need to see some signs or signals of weakness in minor timeframes, such as maybe, I don't know, the bears being able to break $135.50 to the downside. In other words, if we happen to see the 5-day moving average being broken to the downside, that could be some sort of sign of weakness in minor timeframes. Okay, and if we take a look at anchor VWAPs, we don't have any buyers trapped in Nvidia that we should consider. Now take a look, guys. So an anchor VWAP that comes from the all-time highs of Nvidia is showing us as of now an average price of $120. Guys, let me ask you something. If we display an anchor VWAP from the highest price that Nvidia has ever hit, and we get a price of $119, what information is this anchored volume weighted average price line sending us? An AVWAP. What do you guys think? So, if we say that the average market participant that started a position on Nvidia at its highest price ever has an average price of $119 as of now, guys, what does this imply? This implies that for the most part, and in general terms, every single person that ever started a position on Nvidia is making money as of now. Is that positive? Of course it is very positive. And why? Well, because we didn't have pretty much any buyers trapped at higher levels here, guys. We didn't have any buyers trapped above the current price of Nvidia. So that implies that we didn't have important levels of overhead supply above the current price of Nvidia. That's bullish. I think, guys, that we have an all-time highs of Nvidia coming up sooner rather than later. If Nvidia breaks the 5 DMA to the downside, okay, we're talking. Maybe that isn't the case. We'll see what happens. The chart will let us know what we have to do. That's it. Chipotle. By the way, I ended up taking the trade that I told you guys last Friday with Chipotle consolidating above $59.60. This is a critical, and I don't know how to emphasize this, guys. $59.20 is a matter of life and death for Chipotle. I would put it that way. Take a look, guys. If I zoom in here, take a look at where we find the 5-day moving average at as of now. $59.20. Take a look at how the bulls of Chipotle already failed at $59.20 on 1, 2, and 3 occasions recently. And on top of that, if I pull up some anchor VWAPs in the case of Chipotle, what do we see? Let's take a look. Take a look. Where is it at? Okay, this is Chipotle. What is how? So okay, we have $58 and what is Chipotle? Chipotle closed today at $58.85. So it closed here. So take a look, guys. A bit below the level that I just pointed out, $59.20. What do we see here, guys? An anchor VWAP that comes from all-time highs. This a VWAP that comes from $69.16, which happens to be the all-time highs for Chipotle, which was hit back on June 18th, is signaling as of now $58.16. So a process of consolidation of Chipotle, a potential process of consolidation of Chipotle above the 5-day moving average and at the same time above a previous level of resistance at which Chipotle already failed on pretty much 3 or 4 occasions, and at the same time above the anchor VWAP that comes from all-time highs, is bullish behavior. So in my opinion, I would be thinking about going long Chipotle above $59.20 and below $59.20. I don't know. I wouldn't feel, very optimistic about Chipotle. So keep an eye on that level, guys. A very crucial level for Chipotle. $59.20. And if we take a look at the market structure of Chipotle, let me see, CMG. I did close my position. Yes, I did. Yeah, I did. I got calls on Friday at $59.20, and I closed on Monday. We had a little spike on Chipotle. Yeah, I did close. I did. Yep. Let me see. I should have Chipotle available here, right? There you go. Chipotle Mexican Grill. Chipotle. I got shares, but I'm holding till earnings. Or before earnings, right? When is Chipotle posting earnings? Okay, on the what? On the 29th. Yeah, we could see. I mean, that's a good idea, Ocean Goose. I give you that. We could see a front running of the report. I like it. I didn't know that Chipotle is posting earnings in how many days? On the 29th. What, 12 days? I like it. And let me tell you something. I am going to steal this idea from you. If Chipotle recaptures $59.20, I am going to be grabbing 50 or 100 shares. I like it. We could see a front running of the report. Yeah. I like it. Good idea, bro. Very good idea. And obviously, we would be selling out of our shares before the report comes out. Obviously. I got at $50. Okay, good. I like it. Awesome. I'm stealing this idea from you. Okay. If we take a look at the market structure of Chipotle, rising demand and rising supply. But take a look at the demand. The level of the demand is higher than relative to the level of the supply. That implies that we have more buyers than sellers in minor time frames. Yeah, good. $59.20, and I am in. Boeing, sure. Let's go ahead and take a look at the flying coffin. BA. Wow, this stock is such a disaster, guys. And they are posting earnings next week. And we are still waiting for the news about a potential agreement with the union. If that happens, guys, this stock has an appointment with higher prices. More likely than not, in my opinion. Excuse me. I will explain to you guys why. So, when the news about the strike came out, Boeing was trading, guys, at $173. And don't get me wrong. After the strike was announced, we kept getting bad news on Boeing, about Boeing. Because this is, wow, I mean, guys, in the case of Boeing, this is a phenomenal disaster. So, for the most part, we get bad news about Boeing on a daily basis. So, keep that in mind, right? But, in, I would say, practical terms, before the news of the strike came out, Boeing was trading in a major downtrend. You know, this wasn't a good-looking stock way back then. But when the news came out, Boeing was trading at $173. What happens if an agreement with the union happens to be announced? I think, I could be mistaken, guys, I think that the reaction of the markets would be positive. But Boeing posts earnings next week on the 23rd, I think on Tuesday or Wednesday. Let me take a look at the implied move, at the expected move of Boeing. Let me take a look. Let's pull up here earnings whispers. Let's see. Oh, take a look at the sentiment of the markets, guy. Oh my God. Oh my God. Take a look at this, guys. So the expected move is 6.6%. Fair enough. But take a look at this guy. Oh my God. 70% of the market participants are expecting Boeing to miss on everything. EPS, revenue. And take a look at the price expectation, guys. So, this would be, how much? This would be like, okay, 77% of the market participants are expecting Boeing to go down once the report comes out. So, the sentiment, the general sentiment of the markets is super negative. Super negative. So the bar is super low, guys, into the report. And I am not suggesting to any of you guys to buy calls or to, get in the casino with Boeing. But the sentiment is super, super negative, guys. Usually when that happens, the bar is too low and the reaction of the markets to whatever is posted on an earnings report is usually positive. That's my 2 cents on Boeing here. However, the expected move is 6.6%. So let's take a look. Let's translate that into dollars. 6.6%. That would imply that Boeing is going to be going either up or down. Something like, let's see, 6.6, $10. Yeah. Just reduce their 10% employees around 17,000. That could be a good, as Mehmet states, that could be good news, bro. Yeah. But the expected move is $10, guys. This is gonna be a roller coaster ride. Yeah. I think, and take a look at the technical chart, guys. Below a downward sloping 200 DMA, downward sloping 100 DMA, downward sloping 50 DMA. This stock is guilty until proven innocent, guys. But we can make a case here in minor time frames that the 5 DMA is starting to go up. This could be positive, guys. This could be positive. I think that at this point, guys, the markets have already priced in a lot of bad news, guys. Okay, let me put it this way. I would be amazed, guys, if Boeing goes down after the report comes out. It would be mind-blowing. It could happen. This company is a disaster. This company is a shame for the United States of America. But it would be jaw-dropping, in my opinion. From a technical standpoint, guys, if you guys want to take a short-term trade, just keep an eye on the convergence, I would say, between the 20 and the 5-day moving average. So the 20 DMA is signaling as of now $153, and the 5 is signaling $152. So let's draw a line here. I don't know, say that Boeing consolidates above 153. This could be opening the door for a potential test into the report of the 50 DMA. The 50-day moving average is signaling as of now $161. Take a look at the slope, guys, of the 50-day moving average. And remember what I just showed you guys in the case of supermicrocomputer. This 50 DMA is very obviously downward sloping. I think that at least the first test or a first potential test of this 50 DMA would be an unsuccessful one. Let's just put it that way. And on top of that, guys, take a look. This downward sloping 50 DMA is coinciding with a previous level of support back from early August. We're looking at roughly $161. I would be grabbing puts of Boeing here, guys. And I rarely ever, guys, get puts on levels of resistance. I rarely ever do that, guys. When I grab puts, I don't know, I would say that in the 99% of the cases, I grab puts because an important level of support was broken to the downside. But in the case of Boeing, I would be grabbing puts here, guys, at 161. And this is the next potential gap to the upside. So maybe consolidation above 153 opens the door for a test of $161. And keep in mind that the expected move after the earnings report comes out is at around $10. This is gonna be a roller coaster ride. And the report comes out. Let me see, guys, on the 23rd at 7:30 a.m. pre-market, for the most part. Government holding them up, yes. Yeah, this company is an embarrassment, guys, for this country. An embarrassment. This is not the way. This is not the way that capitalism should work, guys. So we always say, right, that the U.S. is the most important capitalism in the world, and this is not capitalism, guys. Such a shitty company, a money burning machine, being bailed out left and right by the government. This is not the way it should work. This is an embarrassment for this company. But we can make a case that this company has some sort of importance from a national security standpoint and stuff like that. But this company is an embarrassment. Unbelievable. Intel, sure. Live if he's coherent enough for you, bro. Live if he is coherent enough for you, bro. Okay. Let me see. Intel, INTC. What do we got here? Intel. So it didn't go much. It didn't go up much today, guys, despite the fact that TSM killed it. So despite the fact that, that between TSM and Nvda, we can say that both stocks were the tide that was lifting all boats. That wasn't the case Intel didn't benefit from that, right? It went up today 0.58%, and it closed the trading session at $22.44. So another major downtrend, guys. Downward sloping 200 DMA, downward sloping 100 DMA, and the 5-day moving average is starting to downward slope. Not a good sign, guys. So this is an easy one, guys. A no touch below the convergence of the 20 and the 5-day moving average. Take a look at, remember, the pink line is the 20 DMA, and the white line happens to be the 5 DMA, 5-day moving average. So a no touch below $23 by any stretch of the imagination. And if the bulls happen to be able to recapture $23, maybe a process of consolidation could allow the bulls of Intel to gather some momentum in order to make a push to the upside in order to try to fill this potential gap up to $24.25. This is a previous resistance back from late September. If we were able to take this trade the way that I am describing it here, guys, from $23-ish up to $24.74, this could represent a 6.33% profit trade. So, I totally didn't know there was a company. I'm an idiot. I apologize. No. It is a company. How about that, huh? Kalen Abbott. That's fine, bro. So, an easy one, guys. This is a major downtrend below a downward sloping 200, 100 DMA. Guilty until proven innocent, and ultra guilty until proven innocent below $23. A no touch, in my opinion, below $23. Let me see the market structure of Intel. INTC. 524. Oh, the market structure, guys, looks promising. Take a look. Remember, this is a market structure chart, guys. On top of the chart, you guys can see the demand or buyers, and at the bottom, the supply or sellers. The demand is going up, the supply is going down. This is a very good looking market structure, guys. So keep an eye on Intel, guys. Above $23, maybe we have a bit more of upside for Intel. And if we pull up here incurred VWAPs, incurred volume weighted average price lines, this gets really ugly, guys. Take a look. We have 1 billion people losing money on Intel. 1 billion. Take a look. An anchor VWAP that comes from all-time highs. In the case of Intel, is signaling as of now $40. We have market participants, guys, holding the bag on Intel with an average price of $40. It's a tragedy. Take a look at another anchor VWAP from let me see. This was, I don't know, let me see. Okay. So this was the highest level that Intel hit last year. So whoever, or I would say, or let's say that the average market participant that started a position in Intel when this stock hit $50 in December of last year, well, they have an average price of $30. A disaster, guys. And an anchor VWAP displayed from the last earnings report of Intel is signaling as of now $21.17. So, I mean, other than the market participants that started positions on Intel from its last earnings report, I mean, pretty much other than those people, everyone that ever started a position on Intel is losing money as of now. Ugly, guys. Ugly. But yeah, maybe there's some sort of short-term trade in the case of Intel above $23. Not a problem. What other request? KLAC. Let me. Oh my bad, guys. KLAC. Okay, KLAC. Corp. Oh my God. Jesus. Guys, I don't know. I don't know what happened here. This stock collapsed. It went down 19%. It has gone down, guys. 19% in a matter of 3 trading sessions. So be careful here buying the dip, guys. Guys, by the way, I need you to learn a concept. And I know that many of you guys are new in the business. Do not buy the dip. Buy strength after the dip. There is zero reason for anyone to try to guess the bottom here in the case of KLAC. So the net aggregate opinion of the markets is telling us that something super wrong is going on with this company. Do not be a hero. Stay away from these guys. And who asked Kalen, right? Was it? Yeah, no, William. William, stay away from this. So what could be a potential signal of strength and quote unquote, I guess, strength after this dip? You guys need to see at least a previous level of support or resistance being recaptured. So, in other words, let others do the job of guessing a bottom over here and do not try to guess it. So say that KLA recaptures $700. This is a previous level of support. Sorry, guys. Back from early September. Then maybe you can think if you guys think that there could be a larger push to the upside here, maybe you can try to buy this dip. But do not try to guess the bottom here, guys. Ugly looking chart with a downward sloping 5 DMA below all the moving averages. Do not be a hero here, guys. Yeah, so no puts. It could be, but I don't know. I mean, the push to the downside, William, that we saw here is a bit extended, you know. That doesn't imply that this stock cannot keep going lower, which might be actually the case. But it is a bit extended. So I would wait for some sort of bounce, and I would be selling the bounce, guys. Over here, we have a previous level of resistance at $685. Yeah, I would wait for some sort of little bounce. I would try to identify a previous level of resistance, and I would be trying to sell the bounce. Yeah, I would be doing that. Yeah, sure. Okay. WBA. That's Walgreens, right? Let me see. Walgreens Boots Alliance. Wow, a very ugly looking chart here, guys. Take a look at this. A major downtrend. Super major downtrend. But this stock is starting to show some positive signs. And I am going to quote positive signs. And why? Well, because the 5-day moving average is upward sloping. That happens to be positive. And take a look at these guys. What did I say once we started the live stream today in regard to super microcomputer? Do you guys remember the slope of the 50-day moving average? Take a look at the slope of this 100 DMA, 100-day moving average. This blue line that I am pointing out with my mouse. It is super downward sloping. That implies, again, and I don't want to sound like a broken record, guys, but you need to understand these kind of concepts. So that downward sloping 100-day moving average is putting downwards pressure over Walgreens Boots Alliance. Take a look, guys. So today, let me see if I can pull up here a 1 day, 1 minute. Now, a 5 day, let me see. So Walgreens WBA was close, guys, super close from making a test of that 100 DMA. But the downwards pressure that this downward sloping 100 DMA is imposing over Walgreens was so brutal, so heavy that we could not even see a test of this 100-day moving average at $11.32. The downwards pressure was brutal, was massive because of the slope of that 100 DMA. So the 5-day moving average happens to be upward sloping. That is kind of positive. And if I draw a line here, guys, take a look. A line that goes over the 5-day moving average, this white line that I am pointing out with my mouse. Take a look at this coincidence. This 5 DMA happens to coincide with a previous level of support for WBA back from late August. It is a potential level of support. And let me take a look at the market structure of WBA, guys. Let's see, WBA. Come on, WBA, pull up. I should have it available. Let me see. Walgreens Boots Alliance. Let's see how the imbalance between the demand and the supply is looking like. Take a look. The demand is going up. The supply is also going up. But the fact that the demand is rising is positive. I think that maybe that could increase the likelihood for this 5-day moving average that coincides with a previous level of support at $10. This increases the likelihood for that level to potentially act as support. $10.07. And is WBA going to be able to burst above the 100 DMA at $11.29? I wouldn't bet on it, guys, because of the slope of the 100 DMA. But yeah, maybe there's a trade here to the upside, guys, from $10.13 up to the 100 DMA. $11.32. It could represent a 10% profit trade, guys. Nothing to sneeze at. Yeah. But be careful. It is a major downtrend. And obviously, guys, and you know that I use a lot, and I mean a lot, the 5 DMA, the 5-day moving average. If WBA cannot hold, is unable to hold the 5 DMA as support, this technical chart is going to be looking extremely ugly once again in both major and minor time frames, and it would be a no touch, at least from a long standpoint. And I don't think it I mean, why not? Let me take a look at some anchor VWAPs here, guys. In the case of WBA Walgreens Boots Alliance, this gotta be, I mean, bag holders central, guys. I don't even have any anchor VWAPs here, guys. Let me display an anchor VWAP from the last earnings report of WBA, guys. Look, take a look. So an anchor VWAP that comes from the last earnings report of WBA is signaling as of now $10.63. And let me see. So we have the 5-day moving average at $10.02. So we already know that we have some buyers trapped at $10.63. So ideally, in order to go long Walgreens, I would rather see a process of consolidation above $10.60. So above the 5-day moving average, but also above the anchor VWAP that comes from the last earnings report of WBA. Yeah. What moving average do you use that stays consistent regardless of the time frame? Yeah. Daily moving averages. But you have those available on Thinkorswim, Kev. Yeah. If you guys, and I know that most of you guys use TradingView. If you guys use TradingView, you have to use simple moving averages on the daily. If you use simple moving averages on a daily, you are going to get the same levels that Thinkorswim shows me, regardless of the time frame. Because my setup, or the setup that I use on Thinkorswim, is with daily moving averages. But those are not available in most brokers, I'm afraid. Yeah. Those ones are not available. So, okay, guys, let me see. I think that, yeah. I got to wrap it up. It is an hour, guys. I still need to make a video. Can you guys believe that? I still need to make a video in Spanish. I gotta, on Thursdays, guys, I gotta tell you, I'm telling you, I gotta run the extra mile. And I do it. And I really enjoy hanging out with you guys, but, you know, it is what it is. I don't want the stream to go over an hour. Because once I am done streaming for you guys, I release the stream openly on my YouTube channel. And if the stream goes beyond an hour and 15 minutes, an hour and 20 minutes, and I don't get many views. So, you know, thank you very much. Thank you for watching. Thank you for listening. And, well, guys, come on. Let's cross our fingers. Please, repeat after me. Please, pull the rug out. Please, pull the rug out. Please. Let's go down. We need trading opportunities. Please pull the rug out. Cross your fingers. Thank you, guys. Take care. Enjoy the rest of your day, okay? Bye. Pull the rug out. Bye-bye. Hashtag pull the rug out.